Welcome to the latest Motley Fool scoreboard. I'm on Chocobaloon, and we've got longtime fools Lou Whiteman and Toby Bordelon giving a 1 to 10 rating to the aerospace and defense contractor L3 Harris, ticker symbol LHX. Start with the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you have 8s. I'll start with Lou since he covers the industry really closely.
So this is the newest defense prime contractor. They were created in 2019 via a merger between L3 and Harris, hence the name. And this, I think, is the contractor best suited to cater to the modern Pentagon. It used to be that metal benders ruled the earth, companies kind of with the unique skills it took to build a battleship. But today it's more about the companies that can supply the brains to all that brawn. L3 Harris is a defense electronics specialist providing command and controls that go into all the big platforms, Joint Strike Fighter, all of these big things. They have a role there. They have the exposure to space, the final frontier, the form of sensors, payloads, and rocket engines. Overall, it's not the flashiest contractor, but it is well positioned to thrive in a number of important areas and almost agnostic as to who wins these massive platform deals. Just a lot to like here.
Yeah, I went with 8 here to a key supplier to the industry. And look, if you've been paying attention to the state of the world right now, right, you probably know that business is booming for these defense contractors. It's not what we want to see in an ideal world, right? Hey, it is what it is, though, right? And it's conflict is probably good for L3 Harris. That's just the way it works. That merger Lou talked about in 2019 created the current company, turned them into one of the largest defense contractors in the U.S. I think they were number 6 at the end of that merger. With that size, it comes scale, comes power, comes dominance when it comes to defense contracting, assuming you do a reasonable job at it, and they do. I don't think that's going to change anytime soon. It's a solid business here.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you agree again with 7s. We'll start with Toby.
Yeah, I think 7's right here. CEO Chris Kubasik has done a good job, especially with growing by acquisition. Aerojet Rocketdyne being the most recent example of this. He comes from the L3 side. He was actually CEO after that merger, and he's been a big part of overseeing all that integration since then. Executive team looks solid, but they have a few key people, the chief technology officer, the CFO. They've only been around with the company since 2023. So that's one reason I'm not rating them higher than I do. I kind of want to see how all that shakes out.
Yeah, Kubasik at one point was the heir apparent at Lockheed Martin, which is the industry giant. He's got a great track record, great history in this industry. And one of the unappreciated core competency of these big defense contractors is the ability to communicate with, to serve, to navigate that customer. Working with the U.S. government requires a unique skill set that most corporations lack. I really like that this management team, they understand the customer well. They're very good at skating to where the government puck is going to be, if you care for a butchered metaphor. He is a little deal happy, which, is kind of a mark against because there's always merger integration risk, but there is a good track record. Overall, he's the right person for this job, and I'm glad he's there.
For financials, a 10 is a fortress, a 1 is yikes. Lou's got a 7, Toby's got a 6. We'll go with the higher number.
Yeah, 7 is probably optimistic. So I get the 6. Look, the balance sheet has been a bit of a mess post-merger. Just the normal integration stuff. Plus, they have been quite acquisitive. As Toby said, they bought Aerojet. They bought some other businesses. In a perfect world, I'm guessing LHX would have rathered those assets wait to go to auction until the merger had been kind of settled a bit. But look, when you have a good opportunity, you have to take it. You can't time a seller. If you look, long-term debt up 200% since 2019. They're working on it. Debt has fallen to 3.2 times EBITDA from 3.7x just 12 months ago. They're focused on debt repayments. Even as they've done that, they've boosted the dividend 23 consecutive years. They've bought back 13% of the float since the merger. As soon as they hit their leverage target, they say more than 100% of excess cash will be returned to shareholders. I like this balance sheet eventually, but it is a work in progress, so I'm dinging it a little there.
Yeah, just a 6 here for me. There are some things to like, right? Revenue looks pretty good right now in terms of growth. 8% last quarter, 5% organic growth. Nice to see from an acquisitive company. Order backlog is good, $7.2 billion into the quarter. Cash flow is heading higher, up 44% last quarter. But that balance sheet, man, I could use some work. Speaking of acquisitive, right? The bulk of the asset base there, the book value, almost half of it is goodwill. that makes sense given their big merger and acquisition history. But at the end of the day, right, you can't use goodwill to pay off debt if you get into trouble, and that's $11 billion in debt versus only $500 million in cash. So I'd love to see that debt come down a bit to kind of right size its balance sheet a little bit.
Lou, let's move on to valuation. How well will L3 Harris's stock do over the next 5 years? And how safe is it, keeping in mind a 10 is a sure thing, 1 is a lottery ticket?
So this has been a real loser since the merger. Over the last 5 years, that's only up about 8%. And that's, losing to the S&P 500 by about, 80 percentage points. I think they're 10 to 15% from here. I think a lot of that has been that integration, all this debt, everything we've talked about. We've turned the page. They're going to hit their leverage target by the end of the year. Defense contractors can only grow so fast. So I'm not going to go like to the moon 15% up, but I do think that with dividends, total return, we are easily going to be towards that 15%. For a safety, I'm at an 8. Anything can happen, but even the worst case, I think it just doesn't appreciate as fast as I hope. So I think it's a pretty safe stock.
Yeah, same for me here too. Probably 10 to 15%, maybe at the lower end of that range. World has issues right now. Defense spending is probably going to go up, right? I think L3 is going to benefit from that. And 88 sounds right on safety. Look, this is a defense contractor, right? It's an important defense contractor. They really have to screw up pretty bad for the Department of Defense to let them disappear, right? They got some good incentives to keep them around and make sure they remain competitive with their rivals to some extent there. So, defense contracting tends to be pretty safe when you're one of the big guys.
Time for everyone's favorite. Top it. Lou, is there a company in L3 Harris's space you like more?
So L3 Harris is probably my top pick right now if you're talking like an equipment company. But just to nitpick Toby a bit, really when we're at peace is when these equipment companies really make their money. But it sounds weird, but R&D is where they really get margins. And when you're just buying replacement stuff, it tends, the stocks don't actually work as well. IT, I really like right now. Leidos Holdings, LDOS, is a mix of defense, IT, and electronics. The Beltway Bandits, I think, is really where you're going to see margins right now. They're my top choice there, and that's the stock I'd look at.
Hometown pride here, guys. Sierra Nevada Corporation. Unfortunately, they're private, so too bad for our viewers. On the public side, I don't know. I may default to Lockheed Martin as one to look at. Stable, nice, diverse portfolio. Probably going to get a solid return from them.
Thank you to both Lou and to Toby. They've given L3 Harris a solid overall score of 7.4 out of 10. Short of that 8.0 that would force me to own shares, but pretty strong all around. With maybe the financials is an area to look more closely at. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Zillow. Till then, full on.
Obviously, I am happy to opine forever on L3.